What is going on? Welcome back to the channel. So today we're going to talk to you about Oscar Health. So this stock has been very popular. I personally have been trading it, but I've received quite a few requests to actually do a video on it. So I wanted to go over some of the data points, the latest in updates, and everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So on Friday, it did go down 7.41%, 14.13 the low, 15.08 the high. So I'm going to go over the technicals near the end of the video and kind of go over some key levels to really watch for. Aside from that though, you did have a lot of volume. So 56.7 million shares being traded, 25.6 is the average. One thing that's been relatively odd over the last little bit is there hasn't been any official news. It's just been at the mercy of pretty much the broader market and largely again influenced by analysts. So there was a analyst rating on Friday, set $10 sell that was done by Wells Fargo, Stefan, who does have a 34% success rating, which is rather comical because that's, you might as well like flip a coin at that stage. But even if we kind of look generally, the reason why people are kind of seeing these as bearish is because not only does that $10 price target, given when it was at $14.95, does represent a 33.11% downside, but we can kind of look at some of the recent ones that he did give. So ultimately, his last Oscar Health rating was in, looks like March 13th, 2025, where he did downgrade it to a $16 price target, and at the time it was $12.94. So it went from 16 down to 10, and they went from relatively optimistic last time to quite bearish. So in the span of 4 months, their whole narrative did change. Then you also did have this one right here that came out yesterday, a sell $9 price target. Jeffries, David, who does have a 58% success rating, which isn't all that bad in reality. But if we kind of look at David's, his last rating for Oscar Health was in December when it was a sell. He initiated coverage at that stage and pretty much was relatively bearish. So at the end of the day, changing from 12 to $9. So analysts honestly have been the kryptonite for Oscar Health, and I think that's just Wall Street in general. Analysts always have a very difficult time trying to digest innovative companies, and Oscar Health, I think a lot of people are hyping it up because they see HIMSS, so Him and Hers Health, being quite a big success, and they think that this is going to be the same type of fashion. So at the end of the day, it could very much follow that suit. It's kind of on a smaller scale as well. I think they're only in like 21 states, serving roughly around 2 million clients. Still good, not hating on it, but at the end of the day, for those of you that are investing in this, assuming it's going to be HIMSS, I think you might be in for a little bit more of a surprise. But nonetheless, you can still make money off of it. I personally have been trading it, and you can kind of see this is just what I've been doing for weekly options. Currently, I do have 200 shares, but once everything is settled, I think over the weekend, IBKR will give me, I think, probably another 2,200 shares. So my average will be roughly 15 and change, in my opinion. So you can kind of see I did a lot of weekly options, various different strike prices. A couple going into next week and one for August. So I like to do that in reality, but I just wanted to kind of show you this. So I did have roughly $1,300. I think that was in options I sold. That is, I get to keep the premiums, and it kind of expired worthless. So that's kind of the moral of the story for that. But aside from all that fun stuff though, you did also have Trump on Friday and pretty much the tail end of Thursday start to stir up the market. So I think in general, just people's kind of viewpoint was rather kind of negative. So that all of course kind of took a toll on the stock as well. But when it comes down to shorts, 20.16% of the free float is being shorted, works out to be 41.62 million shares. On Friday alone, shorts did increase 1.42 million shares, and you can kind of see shorts massively doubled down, which is very odd. And so you can kind of see they've been very reactive, and to be fully fair, based on when the analyst ratings have come out, they seem to have doubled down. So I think they are one of the main culprits as well on why it is down so much. So yes, it's made some pretty good progress, but over the last 5 days, down 10.82%. And I think just generally it's on like a 30% pullback because of shorts and analysts. Just throwing it out there, this isn't the first time that analysts, a string of negative ratings come out, causing a significant pullback. So I don't know if somehow it's orchestrated. I don't really like to wear the tinfoil hat and assume the worst about Wall Street, but I'll leave it to you guys to make that determination. But nonetheless, shorts are kind of influencing it to that capacity. Aside from that, looking at the options on Friday, you had 17 million in calls, 28 million in puts. Despite everything though, you did have 46% of all the options being bullish in nature. So despite everything though, you are seeing a certain level of optimism, and popping over here, you do see that optimism for like a nice recovery going into next week, which is a monthly chain on a side note, for it to be roughly around that $16 range, which is relatively good. Bears are anticipating for it to be sub roughly between 12 and 13. And so ultimately, once I go over the technicals, that'll make a lot more sense. But even on Friday, with it pulling as low as it did, you did still see a good level of buying. So these are all the transactions that did occur on the secondary market above $100,000. So a couple strings of buying, but of course, everything that shows as a bid on a side note was a sell. So you did see a fair share of selling, but in my opinion, I think that was just largely unjustified. A lot of big transactions occurring on the dark pool. So dark pool is often enough used by shorts and other large entities. So that was always going to be a fairly popular exchange. And typically for the stock, it always is. Aside from that though, with it closing at 1438, it is trading between this S1 and this S2. So in comparison to a lot of other growth and speculative stocks, it is definitely lagging. 1357, that is going to be a huge deal going into next week. If it does fail to hold that, then you are going to see a significant panic. So you might see a little bit of a fire sale. So 1005 would be the potential next strong support. Aside from all that though, on the flip side, 1575 and then 1926 is going to be the next strong target / resistance point. And funny enough though, I actually saw on Twitter one post. So Oscar Health down 7 of the last 8 days, down 35%. He liked it at 16, loved it at 14, will marry it at 13, have 2 kids with it at 12, have 8 kids at 11, and will divorce it at 10. So I assume that's meaning stop loss at 10. In my opinion, that's actually would kind of be the optimum time to buy. So it might be a little bit more reversed. So I think a lot of institutions are panicking that it potentially will break below this point right over here of that 1357. And if that does really fail, then yeah, you could see that $10. But you could save yourself 30% and just sell at this S2 and just buy in at 10. So kind of disagree with this one right here, just saying that you would divorce it at 10. So yeah, let me know your kind of general thoughts on that. Aside from all that fun stuff and being influenced by analyst ratings, there hasn't really been anything else really coming out about the company itself. On the actual chart itself though, it is not necessarily the best. It did over that span of like a week break below not only the 50, 100, and 200-day moving averages, but it did also break below that super trend. So that does mean that you have some negative kind of suppression coming from algorithmic trading. Stochastic RSI, it is very oversold. So potentially you could see a little bit of a recovery going into next week. We have a lot of big data as well as a lot of big companies starting to kick off earnings season. So I think at the end of the day, you could see a potential nice recovery. So kind of go back over here and just take note of this. So 1575 and then 1926. So I don't think it's fully down and out. Are we going to see a lot more volatility? Most likely. Are we going to see some negative analyst ratings more potentially in the next several weeks? Then probably, which could cause again a little bit more of a pullback, but I think that's a pretty good buying opportunity in my opinion, and this is why I will continue to kind of just dollar cost average, do my options and whatever else. Of course, I kind of disagree with, again, this. I don't like to marry stocks whatsoever. So if a stock is lagging, I have no trouble really kind of just cutting and whatever else and moving on. So this is kind of my quick thoughts on the stock, going over some of the data points. If you do want me to kind of do more of these types of videos for Oscar Health, let me know in the comments below. Hit that thumbs up and subscribe. Hopefully everyone has a kick-ass weekend. One final thing though, if you are looking for some solid buy signals on stocks, options, crypto, pop over to my Patreon. Definitely worthwhile, and link in the description below and also the comments for that. With all that said, appreciate all of you watching.